So what I want to talk about right now is getting into it, the nitty-gritty as to what an intermediary is, where we can find these deals, and also what we require from these deals to come in as far as the intermediary and what we expect from the intermediaries to be able to bring us deals.
Okay.
Okay. Now, Corey, people are wondering, who's this guy in the pink shirt standing next to me? Can you tell us the Corey Posgay story, please? Were you an original member of the firm? Where did you come from? How did we meet? And why are you on this video?
Okay. No, I'm not an original member of the firm. I started with Sal. I saw him at a workshop, a live event. Actually, I paid good money, several $1,000s to attend, and I was so impressed with his stage presence. And after 4 days of learning from him, I wanted to see if I was able to work for him, knowing that he has an office in Las Vegas where I currently reside. Of course, he wouldn't hire me, but he says there is another option here of an intern program, where in essence, or an apprenticeship, if you will, and I then had to pay Sal to become an apprentice with him. And about 6 months later, then I guess he liked me enough to hire me.
Yeah, so he survived it. We were able to change him from a very laid-back California mentality to someone who's very uptight, correct?
Yeah, a New Yorker, California, put the two together.
But we were able to change you, right?
Tell me about... changed you.
You changed me, yes. Okay, things have gotten a little laid back, I guess, in this office. What I want to know is, what is your background up until that point?
Okay.
What were you doing before that, before you became Corey the institutional guy?
Well, when it came to real estate specifically, I was the next Donald Trump is what Sal would call me. I did a lot of investments here in Las Vegas, primarily between 2000 and 2008. And obviously, if you're familiar with what happened with real estate in Las Vegas, it increased exponentially. And so on paper, I was a millionaire. Unfortunately, when the downturn hit, that also had all my assets wiped away. So a lot of my real estate investments went from over $1 million total to just a fraction of that.
Okay.
As far as, on the personal side, then I was in the Marine Corps for 6 years, and I have a master's degree from UNLV. So my background is hospitality. That's what brought me down originally to Las Vegas from Southern California.
But not real estate.
Not real estate,
okay.
Correct.
So you were Donald Trump on paper, you bought a book for $15, and you decided, hey, let's build a house of cards, right?
Well, everything would be correct except for buying the book for $15. I've bought several $1,000s worth of programs from other educational speakers, if you will.
So I wasn't your first guru, is that what you're saying?
Correct, you were not.
But I'm the last guru?
I hope so.
Okay, I hope so too. So what we're going to do is we're going to talk about some of the things that you've been working on since you've been here. Not everything that we're going to talk about in this video is something you're still doing currently, because you've actually have graduated onto bigger and higher responsibilities. But one of the things we want to talk about is when we're looking at dealing with people, when we're talking about crossing trades and doing deals on an institutional level, which everybody can play in. I mean, if Corey can do it, he was a sous chef, right?
Well, that was one of my jobs.
He was a sous chef in the Marines who read a $15 book. No, I'm kidding. But the point is, if he can do it, anyone can do it here. And it just takes a little bit of knowledge, because the differences between success and failure in this business is how much knowledge you have, your knowledge base. We call that intellectual capital. So what we're going to talk about here is identifying multiple investors buying real estate product. Now, before we started this recording, I put in red there actively. Actively, okay? What we want to do is we want to make sure you're focusing on certain institutions that we're going to discuss, that we're going to talk about a little bit here on this video. We're not talking about dealing with retail investors. Retail investors are who? Mom and pop, right? It's safe to say that they're out of money right now. They're out of money today because the banks are no longer lending money. These are people who would show up at foreclosure auctions and they would be successful because they knew that they could get a hard money loan, or they would be able to get some sort of a loan like Corey did to be able to build a small empire in northern Las Vegas, correct?
Correct.
So these guys aren't buying anything, and they don't have any money. And also, to be honest with you, they don't really have the same level of intelligence that you want to be dealing with folks who are dealing in a higher league, correct? Corey has seen that when he started working with us, that his experience and success exponentially increased. I'm borrowing your words now. Increased, and the reason is because he was dealing with real playmakers and what we call in the business grown-ups, correct?
Absolutely, without a doubt.
These are institutions. Pension funds, smaller balance pension funds, love buying real estate product. Why? Because they have pensions they have to fund. These are smaller pension funds, not the big ones that you talk about in California like CalPERS or some of these huge plans that you might be a part of. These are smaller ones like attorney firms, dentists, lawyers. These are folks that have retirement funds locked away and they need to have a rate of return because that rate of return actually puts food on the table. Does that make sense?
Yep.
Putting it into something like gold or stocks is hoping and wishing, and that's a problem. So if you have a pension, if you're on a fixed income, you're going to need cash today to eat, correct? Okay, that's important. Other institutions that we like to talk about who buy product, okay, and this is the biggest thing that I can talk about right now because this is what we call the single point of failure. Okay, a lot of people, and please pardon my handwriting, a lot of people what they do is they find the deal and then they go out and find the buyers, correct? The deals are all there, but what's in shorter supply are the buyers at this point. You have to be very focused and calibrated to be able to identify which buyers are buying what product, okay? What else do I like? Other hard money lending companies. Hard money lending companies are companies that make loans, but they also buy paper too as well.
Okay.
Hard money lenders are not operating underneath the same strict regimented regulations as banks. Okay,
I remember when I started though, I didn't even know, what does it mean by a hard money lender?
I don't know why they call it hard money lenders. They're the easiest money to get. These are private investors who pool their money together and they lend it out at low LTVs, low loan to values, at a high rate of return for a short period of time.
So it's like a credit card basically.
It's sort of like a credit card with a high interest rate. All right, hard money lenders are great because they understand the business and they're actively, not only are they making loans, but they're also buying loans, and that's important too. Not only residential, but also commercial, the C word.
But for the investor, they like the hard money loans because even though I have to pay 15% and a couple of points up front, but if I know if I'm going to double my money by selling that home, they're okay, it's cost of capital.
Yeah, absolutely. So that's why people use hard money. It's not the cost of the capital that's important, especially right now in these times. It's very difficult to find capital. Banks aren't lending money. It's the availability of capital, and that's the most important part. And that's what separates the men from the women in this business. I mean, the men and the women from the boys and the girls in this business.
Good correction.
A good correction. I saved that one. Okay, perfect. All right, so we're moving on. Who else buys this type of paper? Well, there are small balance hedge funds that buy this stuff too as well. People buy these. These are institutions, smaller hedge funds, usually with about less than $30 million under management. These are people who will buy this type of product all day long, okay?
What's the difference between a hedge fund and a hard money lender?
Well, a hedge fund is usually seen as a cowboy. A hard money lender will lend against real estate assets.
Okay.
A hedge fund could be anyone. And these are people that have a pool of capital that basically can invest it in anything that they want. Okay, mostly they operate in equities and they do, what we call high frequency trading, day trading, and they're in and out of stocks and they make a profit off of that. Some of them actually have hedge funds that are set up to invest in very rare instruments and coins and stamps and stuff like that. So it's just an idea. Okay, I have an idea. I'm Corey. I'm going to invest in Stradivariuses. I'm going to lend money against Stradivariuses, which are very expensive, rare, collectible violins. So you can do that. You can set up a hedge fund to do that. A hedge fund is basically like a cowboy. They can do whatever they want.
Okay. It's usually what, a group of investors?
A group of investors pooled together. That is correct. Okay. Family offices. Corey, who are family offices? These are rich families. Are they the Rockefellers? Well, not really. They're usually people with a net worth of over $5 million, and they usually have an attorney or a private money manager that manages their funds. They love these types of real estate investments. They love them. They don't really like the stock market as much. They don't trust the stock market, and they actually pay people to invest in real estate type of assets. Family offices are buyers of real estate product. They're buyers of notes, both performing, non-performing, REO, commercial, residential, second mortgages, the kitchen sink, you name it. And they know it, they understand it because they have people who are trained to put their money to work for them in these types of assets.
Okay.
All right.
How the heck do you find those people though?
Well, I don't know. That's a good question. There's also some websites out there too that talk about buyers. You can see what they've traditionally been buying in the past, what they're actively buying today, not what they were buying 3 years ago, 4 years ago when times were a little better. These are the people who are buying assets today. They understand it, and what I want you to do is I want you to focus on who they are. There's some websites that you can go to that will detail to you who's buying what, and this is important information to have because now you're able to build a very robust buyers list confidently and easily.
Okay, so goal number one is to build and find
Goal
Or
number
find and
one
build.
is find and build your buyer's list. You have to build your buyer's list first. Don't do what the other people are doing, the people who are no longer in the business. What they would do is they would find a dealer that what they think is a deal, and then they go out running around trying to find a buyer for it. And usually they get caught because they would never be direct with the buyer and they would never be direct with the seller, correct?
Correct.
So now you have a daisy chain 9 miles long of people who are deaf, dumb, blind, and stupid who don't know what they're doing. And they have all their hopes and their hat hung on one deal, and it never gets closed. And that's how people get discouraged. So what you want to do is you want to be direct, and this is what we mean by grown-ups, big girls, big boys, have to go out there and find the institutions who are actively buying this product. It's not hard. It doesn't matter if the stock market goes down to zero. It doesn't matter. People are always going to have money and capital put aside for good real estate deals.
Okay.
All right? Great.